Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
We do collection and payout in the same API. There's very few companies that actually allow you to do both. And we are unique in that you can do any rail for collection and payout. So you can use interbank through our connection, not just like a push to card or prepaid cards. You can move $1 billion or $1.
That was Oliver Werneyer, the CEO of Imburse, and he is our special guest on episode 117 of the Leaders in Payments podcast, and I'm your host, Greg Myers. Oliver was born and grew up in South Africa and found his way to London after getting married, and now resides in Switzerland. Imburse provides insurers and large enterprise companies a single connection point to initiate any payment, collection, or payout, saving them both time and money. Imburse currently has 46 employees and recently closed a roughly $12 million funding round, and they are growing rapidly. Imburse has a unique startup story involving an app that tracked flights, a customer, and a major pivot. Oliver is really passionate about the people side of the business and loves to play golf with his 6-year-old daughter. We've got a great episode today, so let's get started. Hi, Oliver. Thank you for being here and welcome to the Leaders in Payments podcast.
Thanks for having me.
Absolutely. So let's dive right in. Tell our audience a little bit about yourself, maybe where you grew up, where you went to school, where you currently live, a few things like that.
Definitely. So my name's Oliver. I was actually born and grew up in South Africa into a German family to make it more complicated. So I actually was born in South Africa, went to German school, studied there, sort of actuarial sciences, so really deep into the insurance space. After my studies, worked there at a life insurer, made my way, wanted to see more of the world, found my way to London after getting married, and then from there found my way to Switzerland.
Okay. And let's talk about the company Imburse. So tell the audience what Imburse does.
So Imburse really solves the integration problem that many large enterprises face when they want to deploy any IT project, but specifically with payments, right? So what you see out there is a lot of insurers out there, lots of companies have the topic around payments, like for collection or payout. It's really critical to customer experience. But no matter what they seem to want to do, whether it's for new products, new customer experience, operational efficiency, adding new providers, everything results in like $1 million project that's going to take at least 15 months. And Imburse is really there to solve that problem by providing like a single connection point for companies to be able to initiate any payment, collection or payout, and just don't have to build all these direct IT integrations anymore. They're saving a lot of time and a lot of money for large companies.
And you mentioned insurance. Are there other verticals that you specialize in?
Well, we work with utility companies, telcos, and banks. So you can think of any industry where they struggle with their IT system. They tend to have either a complex IT landscape, legacy IT systems, as well as operate like in multiple regions and or have like complex corporate structures where there's maybe one brand, but it's different legal entities by territory. This just multiplies the chaos inside an organization from a complexity perspective that we end up untangling and really just simplifying for them.
Okay. And how big is the company?
So we are currently 46 people across our offices in Zurich, London, and Lisbon. But we just closed like a big Series A led by DST. Already have investors such as Edition and Guidewire and Lakestar. So we're growing rapidly now towards 80 and probably going to have a new investment round again soon to grow. We are growing immensely at the moment. And I've been around for 3 years and it's been great.
And how do you go to market? Do you have a direct sales force or through partner channels?
We do both, but more particularly, so direct sales for us means everything like an insurer or a company approaching us directly that we have to help deploy. But it also includes our partners such as Guidewire, the core systems that then say like, look, you come pre-integrated, but the project is still between us and the insurer then, right? So we can't count that as direct. And then we have sort of channel partners like the GSIs, like the Accentures and the Capgeminis, because they run like digitalization, modernization projects, and we're a technology provider for those much bigger projects.
At what level, I mean, when you talk about enterprise and large companies that obviously have complex problems and legacy systems, I mean, is there sort of a natural cutoff to when that makes sense, like the size of the company you work with?
I think that cutoff really comes down to how much they generally spend on IT. So you have, I mean, if you think about our licenses start from like 40K a year, it means like anybody who has a payment problem that's at least 40K or more, or you want a significant savings. So let's say everything that they do around payments is at least $200,000 or so, then we can bring a lot of savings. So this, I would say even medium-sized companies and MGAs can benefit from that. But it really is our focus from a sales perspective is to go after the enterprises today, because that's just where we deliver the most value.
And then can you walk us through your sort of pricing strategy? Is it just a monthly fee, a SaaS fee, license? How does that work?
So it's a SaaS model. And we really have three components to that SaaS model, which we call access, volume, and product. So access is really the main license that you have to buy to get access to our platform, where you have access to all these PSPs, banks, voucher providers, you name it. And this is really where you buy your SLAs. Like, do you need multi-time zone support? Do you need implementation support? Do you need architects? Do you need more, like, you need your own cloud instance? So here you can shape what it is you need operationally in terms of support and tech. That's the main component. And that comes with like 100,000 transactions. So we actually don't care if that's in or out, or whether it's $1 billion transaction or $1. It's like a fixed, it's like a counter, right? So we don't take a percentage per transaction. And then you can say, okay, cool, I do more than 1 million transactions. So I buy these bundles, if you will. And those are also like a fixed price component where you say, look, I'm doing like 6 million transactions. And then we quote you like, okay, it's like 50K, because it's more linked to support than anything. And then you have that bundle available. So that's the volume piece. So you can adjust for the volume that's specific to your company. And then the third bit is products. So along the payment value chain, there's different needs, such as direct debit mandate management, card tokenization, KYC, AML, access to those kind of components. And then our client can then choose to add, which generally is linked to like a license fee, as and when they need it. Some of the clients already have that in place. So that's the volume bit is really for business case, and the product bit is optional as and when our clients need it. But along that, it's generally fixed license fee, and we do not take a percentage per transaction, which is important to know because we have no vested interest in one payment provider over another. It makes no commercial impact on us. And thus, we have a great relationship with the payment world because, one, we don't compete with them, and two, we don't take their money.
What would you say differentiates your company from your competitors out there?
One of the key differentiators for us is that we care more about the enterprise than we care about the payments world. So a lot of the sort of payment companies out there that try to solve payments for enterprise, they run off a payment business case, which requires volume. And it's very much payment related. They don't care about an enterprise's single sign-on requirements and multi-tenancy topics. So that's one of the big differentiators, that we prioritize enterprise over payments. And the second one is that we do collection and payout in the same API. There's very few companies that actually allow you to do both. And we are unique in that you can do any rail for collection and payout. So you can use interbank through our connection, not just like a push to card or prepaid cards. You can move $1 billion or $1.
And where do you see this sort of industry, the payments industry, and kind of what you guys are doing? Where do you see it heading in the next 2 to 3 years?
So you've seen a massive amount of activity in the payment world, right? So new providers all the time, new payment technologies at various stages of maturity. So we're talking about like open banking, buy now, pay later. We just went through the crypto part. Now we got request to pay coming in. So even fundamentally and structurally, it's changing. And then you have all these providers popping up. I don't think that will slow down in the next 2 to 3 years because a lot of industries are entering the online commerce space, right? And they're just not used to actually processing their payments through this. So I think there will be a massive amount of growth in that space, but that also necessitates the growth or the emergence of companies like ours, for companies to navigate the space. Because as we sort of spoke about, just because there's more happening, that's worse for large companies. Because then who do they go with? What do they need? And that's where I see this. You see the aggregation, the orchestration topic really emerging over the next 2 to 3 years to help these two worlds connect, like the payment world sell more and better their capabilities into the actual product world.
Where do you think it might be headed if you were to get your crystal ball out, say, in 10 years from now?
I think you see a massive amount of consolidation because payments models fundamentally operate on a volume basis. You need the volumes to make it work. At some point, there needs to be consolidation to make some of these companies more sustainable. So you'll see a massive amount of consolidation. You will also then see a massive amount of emergence of sort of in ecosystem payments. Like the people like Amazon's and Apple and stuff are becoming so big in their own right, they can run entire payment companies dedicated to their ecosystem only. So they don't need outside players, which will take all of that volume out of the game, right? Which I think will be a thing that will accelerate the sort of merger and acquisitions and consolidation activity. And then I think what you will see a significant simplification on the payment side. It'll become more of a commodity. So today, companies and platforms and marketplaces or whatever you want to deal with, they try to differentiate themselves through the payment stuff that they offer. But because I think it will become highly commoditized, there will be less of them. There will be some emerging winners. It will not become so much a differentiator. It just has to work extremely well. And you'll probably see much more of a focus into pre-authorization of amounts, enabling things such as the Amazons to just ship you stuff that they think you might like and securely deduct money that doesn't push against regulation. So I think really a lot of consolidation, M&A, simplification of payments, and commoditizing of payments as a value driver.
And you mentioned the word orchestration. I think that is becoming more of a buzzword in the industry. And I'm curious, kind of where does that sit today, sort of functionality wise? Is it truly that you can plug into a company like yours and have access to everything? Or is there still a lot of growth that has to happen? I mean, is it still a maturing type of industry?
I think you're not wrong if you suspect there's a lot of maturing needs to happen. But I think that is specifically true for payouts. I think collections has gone through a lot of modernization. We've seen the emergence of gateways and PSPs. So I think that part of the industry has come a long way. Payouts, not so much, right? I think they're about 10 years behind collection. So as you're trying to build these modern portfolio of providers, you'll do much better on the collection side than you do on the payout side. Then your question around like, can you truly have access to everybody? I think realistically the answer is no. I don't think neither us nor any player out there can say every company is already connected, right? I don't even think from building a company perspective that makes a lot of sense. But what is true is that from a business model perspective, we have no blockers to offer anybody. And we try to work with our clients to prioritize who should be onboarded as a payment provider. So if you have like a PSP or what they say like orchestrators, the payment processors at the back always have to ask themselves, is it worth it for me? And there you start seeing that while the merchant wants the orchestration to happen, like give me the lowest rate every time, it is and can be a sort of race to the bottom for the people providing the service. So at some point in an extreme, imagine you're like the perfect orchestrator and you get the cost of a transaction for your client down to zero. Then why would that industry exist, right? And why would you then exist? And at some point, the marginal value you add becomes destructive, right? So that's maybe a personal view of mine. But that's not to say that orchestration is not going to grow or not useful. I think it has its applications, and it actually has some applications it hasn't even identified yet. So I think operational orchestration, I think will become a much bigger player than fee-based orchestration. So think about e-commerce for 25 days a year, Black Friday, Cyber Monday, Christmas and stuff. They have extreme volume of payments. And probably for those 25 days, they would love to spread the payments across like 5 or 10 providers just so they can process everything and not have issues with stuff falling over. That's operational orchestration, just so the business runs. And I think that has a bit more of a future than fee-based one, although fee-based one will always be around. But like I said, as the marketplaces get so big, they will build systems that run at cost. Fee-based orchestration is not going to be needed. So your question about can you truly get access to anybody? Yes, if you have the right business model. There's nobody who today provides you a connection where you can literally have everybody at the tip of your finger. Just, I don't think operationally exists.
Right. So interesting. I want to dive deeper for a second in the payout side. You guys obviously have a solution for that. What is sort of the use case? Is that, for example, you are a customer of an insurance company, you have an auto accident, and they're going to pay you X dollars. So in the past, they would send you a check, but today they can direct deposit into your checking account. Is that sort of the use case?
I think there's three types of use cases. So the first one you alluded to is like, I just need more variety. Like I used to do it this way. Customers now demand a different way. Like I don't want to check anymore, or I want something else. I want it in paper. I want it in vouchers. And sometimes you can even link it to like marketing or product. Like how do we create value for our customer? How do we make them like us more? Right? So that's purely a variety question and keeping up with what's happening. The second one is an operational question. Like how do you deploy the technology so that you can deploy things such as AI, automation, new risk metrics. So to give you a practical example, somebody travels, say, from Switzerland to the US, right, on holiday. So I might be well insured in Switzerland. During my time in the US, I have an accident. I have to go to hospital, but the US medical system doesn't know me. So they'll be like, okay, to take you up into the system, you have to put down like an $80,000 deposit. Like, where do I get that from? Like, what do I do? And this is where, for example, an insurer can then create either a virtual credit card or generate a credit card with that limit on that they fund, but merchant lock it either only to hospitals or to that specific hospital where I'm going. So my wife can give it to them. They can process it and say, yep, your deposit is here. And the insurer knows my wife or me can't run around and spend that money at like Macy's or whatever, right? It's locked to only a certain category. So that allows you to automate like bigger claims, knowing that less fraud can be committed. So that's an operational topic. And then the third one is, how do you fundamentally grow into other markets? So imagine like a lot of fintechs or insurtechs or even insurers are now like, okay, I've grown a lot, like just take Chubb or whatever. I'm big in the US. Now I want to go do something in Europe or in Asia. So now you go over and you have zero operational coverage in that space. You have to offer all the local stuff. One, you don't know it, you don't understand it, and three, you don't have it. What do you do now, right? So this is where you can attach it to growth into other markets or other verticals. Two, operational topics like automation. And third is just customer experience. Like, do I offer more? Do I offer something different?
Great. No, I appreciate that explanation. It helps clarify it in my mind on the payout side. Well, let's switch gears a little bit and talk about you. So tell us about your journey, how you became the CEO there, sort of your professional journey.
Yeah, so like I said, I studied actuarial in South Africa, but actually I started my first company when I was 16, purely out of selfish reasons. I liked to play computer games when I was younger, and I just remember I always had to buy my own computer stuff, and as a student worker, you don't earn that much, and it was always so expensive. And the one day I got like a price list in my hand, and all these computer pods were like 40% cheaper than anywhere else. I went to that place, and they looked at me, they're like, no, buddy, you have to be a registered company to buy here, right? It was wholesale. So guess what I did the next day? I registered a company to go buy my own computer stuff. And then eventually my friends wanted to buy, and their parents, and I actually made a little bit of a shop out of it, and ultimately paid for my university like that. That's where I got my first taste of entrepreneurial sort of endeavors. So I've inherited from my dad a bit. Then I went into the corporate world, did my actuarial, worked at an insurer, found my way to London. And then London has quite a strong entrepreneurial environment. And that's really where I got back into it, meeting other entrepreneurs, mentoring some people just how to navigate enterprise and insurance, how do you get in there. And then me and one of the co-founders, we traveled a lot for work for our corporate jobs. And we hated traveling through airports because you always stand there looking at that board, wondering which gate you're going to go through. If there's a change, a big rush. But we said it must be a better way. So in 2015, me and one of the co-founders, we built one of the first flight tracking apps on the App Store. It was called Fly and Rate back then. And in fact, we didn't actually build it as an app for everybody. We built it just for the two of us in developer mode. We used flight stats data. It wasn't called flight stats yet. And we had this great thing like for traveling. And then our colleagues wanted it. But then we couldn't explain to them how to set your app store to developer mode and then download it. So we said, okay, screw it. We're just going to publish it on the App Store. We did it. All of our colleagues used it. It was like 40 people. And then the one day we get a bill from Flight Stats. They'll be like, yeah, your data usage last month, that is £1,000. We're like, what? What is £1,000 for? They're like, well, you have like, I don't know, like 40,000 users tracking flights. We're like, what, 40,000 users? So without any marketing, people started downloading it and now obviously running much higher costs on it. Eventually we grew to like nearly 200,000 users. And now we had to decide, are we going to make a business out of it or are we going to close it down? And we said, no, we'll give it a go. And this is where I used my engagement in the insurance industry. At that point, spoke to one of the US travel insurers, AIG, and they just launched that like flight delay insurance product. And we said, cool, we can sell that. People want that. And they did. But the people wanted real-time payouts. They said, pay me while I'm at the airport. If I'm delayed 2 hours, give me my $30 then. If my flight's canceled, give me my $300 now to sort myself out, not 2 to 10 days later. And then AIG was like, well, we would love to offer real-time payments, but we just don't have it. So that's like a 15-month project, $1 million at least. So if you want real-time payouts, because your business case isn't that big enough yet, you will have to find a way to bring it to us without touching our core IT. And without knowing, that is actually when Imburse was born. We were desperate to put something in place. We developed something in 3 months, which we thought was going to be temporary. When we came back to AIG, they were more interested in buying that solution from us than giving us the product to sell, because we solved something in 3 months that they couldn't do in 15 months for $1 million. And that's really when we were like, okay, is this an AIG problem? Is it an insurer problem? Is it an everybody problem? And then we realized the integration problem is a massive problem that people are really willing to pay for. And then in 2018, made the pivot. At that point, we were 4 founders. There was me. I have more the sales and people management background. I've managed international teams. I've had regulated duties, audit duties, so hence more natural fit in the CEO role. My other co-founders are chartered financial accountant by background, so you obviously had more the CFO role. And our 2 other co-founders were technical founders, so CTO and head of development. And that's how I became CEO of Imburse.
Wow. It's fascinating that you solved a problem for yourself and one other person, and it turns into this company. It's a fascinating story.
Something I didn't appreciate before I really did the startup, because you often read in the startup literature the pivot. People often talk about a pivot, and some say pivots are important. And I can just say from our side, the pivot was really important because it made us change into a business where there was a qualified lead of people wanting to pay for you to solve a problem. It's a much easier way to start a company than just come up with ideas, right? So it makes it a bit easier.
You found a big company that had a problem that you could solve. So what are some things you're passionate about? So maybe one thing on the business side and one thing on the personal side that you're passionate about.
So on the business side, I'm really passionate about implementing like a lot of the stuff that I felt like as an employee at a large corporate like Swiss Re and Genworth and stuff like that. I always felt like, oh, if I had my own company, I could do that better, or it should work like this. And I'm really passionate about the people side of things in the business. Like, how do you motivate people? What motivates people? How do you set up your HR? Like, how do you drive diversity? How do you drive productivity? How do you keep people engaged and delivering, and to have this much more direct impact? Well, and feedback, right? So I could be wrong. I've been wrong on some stuff. Is really great. It's something I'm really passionate about to really engage the team on and push. And on the personal side, I love playing golf, and I do that with my daughter. My daughter's now 6 years old. She's already quite good, and that's the thing we do together, right? And I really, really am passionate about playing golf with my daughter.
That's awesome. I always ask this question because I think everyone brings a unique perspective to it. When I started in payments 16 years ago, sort of fell into the industry, haven't gotten out of it. But today, people look into the industry and payments and fintech and say, hey, I want to build a career in this industry. So they're coming out of college with some aspirations and maybe even have taken fintech type courses. But what would your advice be to them as they come out of college and start in this payments and fintech world? What advice would you give them to help them be more successful?
One of the things is, the main advice I would give them is to understand where to focus your energy, because this is for me one of the fundamental differences between somebody who's leaving a corporate job and entering this startup world versus somebody who's coming out of college. Somebody coming out of college has a lot of energy, a lot of ideas, a lot of motivation to do stuff, but it's a bit like a shotgun. It's very indiscriminate. They don't know where to go. They put it everywhere, and it can be absolutely exhausting and demotivating when you tackle industries like B2B, like enterprises, like insurers and banks, because it's very difficult to understand why does it take a year to convince somebody to buy your awesome project. Like, coming out of college, you'd be like, but my product's awesome. You should be able to do this in 2 weeks. And then they lose the interest and they leave the deals because they think they're dead. So whereas if you come out of enterprise, you actually have much more focus but less drive. So, and here my recommendation to people coming out of college is to find a mentor or two, not an employee, just a mentor from like the industry that you're going after, and just educate yourself to the speed of the industry. They don't have to be an advisor of how to build your product. Just understand in which cycles do these people move? What do their decisioning cycles look like? Like e-commerce companies, they're up for changing payment providers relatively quickly because it's at the product level, the decision, right? And it's purely an API interchange, a checkout page change can be done relatively easily. But when you start hitting other industries like utilities, telcos, marketplaces, that decision sits at the C-suite level that needs board sponsorship, and they only meet on a quarterly basis, and you have to go to the board at least twice to even get do you know what I mean? Like, and I think finding somebody who can mentor you on the speed of whatever industry you're going after will save you a lot of lost energy.
I think that's some great advice. We talk about mentorship a good bit on this show. But Oliver, we've covered a lot of ground. We've talked about you and your background, how the company got started, a lot about the industry and the company itself. Is there anything else you'd like to add before we wrap up?
I would just add that people shouldn't be scared to think big, right? And maybe this doesn't apply so much to sort of American startups and British startups because I think it's more natural just because their home markets are so big. But I still feel like even from there, especially in Europe, people still think too small. And this is quite dangerous in the beginning of the startup phase because you cannot express like what's the market you're going after. Eventually you run out of motivation to go after it and you fall to these traps that VCs ask you. It's like, but why now and stuff like that. So make sure you have the guts to think big and solve bigger problems. And I remember a while ago that somebody wrote about, I'll butcher it now, but doing the dirty work of doing stuff. It's always nice to do the quick wins, low-hanging fruit, design this visual and get 1,000 people signed on. But you only get stuck into the architecture in year 2. And then you realize, oh, crap, it's not as scalable as I thought. So sometimes you have to think big and tackle the bigger problems sooner than you would necessarily like to.
Yeah, I think that's great. Oliver, anything else you'd like to add before we go?
Just a big thank you for having me. And we're talking about payments, and I'd love to always connect more and learn more from people. I think this is something that has made our company quite successful, is that we try to understand the problems people have and build products for that and not build a monument to technology. So people have lots to share and we'd love to learn.
Great. Well, thank you so much for being on the show. I know your time is very valuable, so I really appreciate you being here. To all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.